Hey everyone, welcome back to Find Success for You, the channel where we help you achieve your financial goals. In today's video, we're going to reveal the secrets behind one of the most successful investors of all time, Warren Buffett. How did he become one of the richest people on the planet? What are his strategies and principles for investing? And how can you apply them to your own financial journey? Stay tuned to find out. Warren Buffett is widely regarded as one of the greatest investors of all time. He is the chairman and CEO of Berkshire Hathaway, a conglomerate that owns dozens of companies such as Apple, Coca-Cola, Bank of America, and Kraft Heinz. But how did he achieve such extraordinary success? Well, according to Buffett himself and many experts who have studied him, there are 5 key factors that contributed to his wealth creation. Firstly, be bold. Buffett is not afraid to take calculated risks and go against the crowd when he sees an opportunity. He once said, "Be fearful when others are greedy, and be greedy when others are fearful." This means that he buys undervalued stocks when others are selling them in panic, and sells overvalued stocks when others are buying them in euphoria. Secondly, be ready to accept your mistakes. Buffett admits that he has made many mistakes in his investing career, but he learns from them and moves on. He once said, "You only have to do a very few things right in your life, so long as you don't do too many things wrong." This means that he focuses on his strengths and avoids his weaknesses. Thirdly, don't complicate things. Buffett prefers simple businesses that he can understand and predict over complex ones that he can't. He once said, "Never invest in a business you cannot understand." This means that he avoids sectors such as technology or biotechnology that require specialized knowledge or expertise. Fourthly, believe in what you see. Buffett relies on his own analysis and judgment rather than following market trends or opinions. He once said, "I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years." This means that he invests for the long term based on intrinsic value rather than short-term fluctuations. Lastly, keep track of your progress. Buffett monitors his performance and compares it with relevant benchmarks such as the S&P 500 index or other investors. He once said, "The most important thing is trying to find a business with a durable competitive advantage at a reasonable price." This means that he evaluates his investments based on their quality and price rather than their popularity or hype. These 5 secrets have helped Buffett generate an average annual return of about 20% since 1965, far outperforming the market average of about 10%. But there is another secret that is even more important than these 5. Time. Time is what makes compound growth possible. Compound growth means that your money grows faster over time. Not only do you get interest on your initial investment, but you also get interest over time. For example, if you invest $10,000 at 10% interest per year, after 1 year, you will have $11,000, $10,000 plus $1,000. But after 2 years, you will have $12,100, $11,000 plus $1,100. And after 3 years, you will have $13,310, $12,100 plus $1,210, and so on. Buffett has been investing since he was young, which gives him an enormous advantage over most investors who start later in life. He has also lived longer than most investors, which gives him more time to enjoy compound growth. As you can see, his net worth grew exponentially over time thanks to compound growth. If you want to achieve similar results, you need to start investing as early as possible and keep investing for as long as possible. But how do you invest like Buffett? Well, you need to follow his 5 secrets that we discussed earlier. Be bold, be ready to accept your mistakes, don't complicate things, believe in what you see, and keep track of your progress. You also need to find businesses with durable competitive advantages at reasonable prices, and you need to avoid paying high fees or taxes that can eat away your returns. Remember, the key to investing like Buffett is not to try and copy him exactly, but to understand his principles and adapt them to your own situation. Investing is a personal journey, and there is no one-size-fits-all solution. That's it for today's video. We hope you enjoyed learning about Warren Buffett's secrets to success and how you can apply them to your own financial journey. As always, please remember that this content is not financial advice, and you should always do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next one.